Hello and welcome to Smart Mortgage Insights. I'm Mandy LaRose.
And I'm Conor Levinka. Today we're going to talk to you about creative ways to get financed for a property. Maybe you can't qualify on your own. Maybe there's other ways. What do you have in mind, Mandy?
Absolutely. So we're thinking, just chatting today a little bit about what you can do if maybe you come in and you don't qualify for the amount you want to qualify for, or not quite where you thought your numbers would be, and so you need to get that up, and you need some help doing it. So a couple ways of being able to do that is one, having a co-borrower that would live in the property with you. So some programs limit how many people that you can have on a loan, but they're pretty generous. You can have 3 or 4 people on a loan. I've done a loan with 4 people on a loan before.
What if I don't want them to live with me?
Well,
I like my own space.
So you can have non-owner occupied co-borrowers
okay,
as
cool.
well. Absolutely. Those rules get a little trickier though. So if everyone's gonna live in the house, you don't have to buy a home with a spouse, first of all.
That's a big misnomer in our business.
If you have a spouse, maybe discuss this with them. But if you have a girlfriend or a boyfriend or whatever, you are able to, a friend, you can buy a house with them. They don't have to be a family member to buy a house if everyone's going to live in the property. I've actually done a loan in the past where I did a 4-plex and I had 2 married couples buy the 4-plex. They each lived in a unit, collected rents from the other 2 units. So that was a great way. I've also done that same scenario, but with a duplex. So each of them bought a very, very nice duplex, and each lived on each side type of thing, and that worked out for them as well. So there are definitely creative ways of being able to buy. Another opportunity that you could do as well is to maybe buy a 2 to 3 or 4 unit property. So you live in one of the units, and then you collect the rents from the other units, and we can count up to 75% of the rents coming in towards you qualifying for those units as well. So another way of being able to generate some income. You can have, as we discussed a little bit, a non-owner occupied co-borrower as well. But the rules get a little trickier on that. Generally, this does need to be a family member or a close relative, someone you can give your what's the word I'm looking for? A close relationship with. Yeah. There we go. Yeah, I was trying to fit that in, and or grandparents, aunts, uncles, things like that. They can also be co-signers as well.
Now the key to that is they're still going to be responsible. So that needs to come into the equation as well. That just because they don't live there, if you don't pay the bill, it's going to come down on them. So this is something that's very important to discuss with them. You're both equally responsible. Even if that non-occupant co-borrower is not intending to pay for it, they're kind of like your safety net in terms of the investment for the bank, that they can pay it if not. But if you don't pay it, they're on the hook.
Yeah, if you don't pay it, we are going to go to the safety net, the security blanket, and that's your co-signer. So they are on the hook for the loan as well. We also include their income, their debts, all of that thing as well. So just having just adding someone to the loan, they do have to qualify and help you qualify too. There's actually another option out there too. In Alaska, with our Alaska Housing First Time Homebuyer Program, you are allowed to have a non-owner occupied co-borrower on that loan as well and still use your first time homebuyer. So that's really kind of a cool added feature that they've done here recently. There are a couple stipulations on that, and we can give you those details if that's something that you're interested in. But that is another way of being able to have a co-signer too. And then another option also is an ADU. You can.
What's an ADU?
An ADU is an accessory dwelling unit.
Is that like a mother-in-law?
Similar, yes, absolutely.
I thought people don't like mother-in-laws.
Well, Well, you're not going to rent it to your mother-in-law.
Okay. Whew.
Yeah, no.
I thought you were stuck with your
Yeah.
mother-in-law.
No, doesn't. And just because we call it that, in this case, we will call it the ADU because the mother-in-law is not going to be there.
Perfect.
So, but we can, and on most programs, we can actually count the rents from an ADU. It does need to be a legal ADU. So in whatever area you're buying in, it does need to be legally considered an ADU.
Kitchen, bathroom,
Yes,
separate entrance.
has to have its own little living area. Sometimes it's a garage converted. Maybe it's like a small little outbuilding in the back of your yard, a little cottage type of thing. Maybe it's attached to your property as well, but has its own separate entrance and all of that. So that's an ADU, and that can also be used to help towards qualifying as well. So there are definitely ways of being able to increase your buying power without necessarily you having to figure out a way of you having more income or you having more assets and or less debts, things like that to qualify.
One final thing to note is an adjustable rate mortgage. Up until this point, we've really only talked about fixed mortgages, which means that your interest rate is fixed for the entire term of your loan. In the case of a 30-year loan, 360 payments, your interest rate will never change. With an adjustable rate mortgage, they come in and out of favor depending on market conditions, but there could be a time where the adjustable rate mortgage will give you a lower rate for the first period of 5 years or maybe 7 years, and then after that it could adjust. You could save quite a bit of money in that first 5 to 7 years before it adjusts. So that's some way that you could potentially get into a property at a lower monthly payment at the beginning.
Absolutely. Excellent.
Yeah, definitely talk to your loan originator about an adjustable rate mortgage and if one is currently available and the advantages and disadvantages about that. But hope this was helpful about creative ways to get qualified for a property that you're interested in. And thanks for tuning in. We'll see you next time.
This podcast is sponsored by Residential Mortgage, LLC, NMLS numbers 167729, 196, 576, and 1820404. Equal housing lender.